A slowdown in China's manufacturing has prompted fears the economy may not be recovering as well as first hoped. Michal Meidan, Asia economist at Eurasia Group, is on the phone to straighten out some of these speculations. Michal, thank you for joining me. This is China's manufacturing's slowest pace in 4 months. Many have been saying this news dampens optimism for China's rebound. Would you agree?
No, I wouldn't actually. I think there are two very significant factors that need to be taken into account into this month's data. The first is the new year, which always slightly skews the data. There are 2 weeks off in China in February for the Chinese New Year. The other is that there have been changes to the surveying methods for the PMI, so these may factor into some of the slowdown. Chinese figures, you always need to be cautious about taking them at face value, but looking more at the trajectory. So the trajectory is a slight slowdown from the past month, but we'll need to wait to see next month's figures in order to get a clearer sense of how significant the slowdown is. Moreover, I think that the economy is still in recovery mode for political reasons, mainly. There's the National People's Congress, that you mentioned as well, starting next week. That is sort of the final phase in the leadership transition, and the incoming leadership is focusing this year on stability. That stability comes with economic growth, and they have the policy tools, and they're calibrating their policy tools to steering that economic growth just to get them through the transition, which has been a pretty volatile transition. I mean, it's been testing times, and there's growing skepticism with the party. So that and the main tool that they are using, and we've already seen some of the announcements about this, is urbanization. I expect we'll see a little more of that in the NPC, but it's a lot of government spending, and that also goes back to one of the other factors that may have contributed to the slower growth in manufacturing data. Might have been slower private sector activity, but there is, I think, great there is potential for an increase in public spending and in infrastructure. And again, the political stars are lined up in favour of an economic recovery.
So if we take into account, as you said, Chinese New Year, is industrial activity still expanding?
Yes, I think the census is still of an expansion. I mean, we're not going back into double-digit growth rates like we had 2 years ago. I think those days are over in China. There is a recognition that the Chinese economic growth model has to change. It is unsustainable at the rates that it has been growing over the past 2 decades. So we're not in that kind of super expansionist territory anymore. But the trajectory, I think, is certainly towards growth, continued growth.
And what are the reforms needed now to lift the manufacturing target?
Well, I think the broader reforms that the leadership has in mind and that China is undertaking, and the question is, of course, the speed and the extent to which it's willing to undertake these reforms, is more just the rebalancing the economy towards one that is much more dependent on it's consumer-driven rather than export-driven, and then that's the whole sort of reconfiguring of the manufacturing landscape in China. China can't and doesn't want to be the factory of the world, the manufacturing center of the world. It wants to move up the value chain and become much higher value-added, a higher value-added manufacturer. There are a number of things that, again, there's recognition of Beijing of what needs to be done. That's income distribution by taxing, the state sector more heavily, getting the state sector to pay more dividends, encouraging private sector participation, financial sector reforms, and at the same time, increasing expenditures on social welfare. And I think what we're going to see is, the government is much more comfortable at generating supplies, at spending on its favoured policy goals, and the incoming Prime Minister is certainly more skewed to the social welfare, social housing, pensions, healthcare, that kind of spending. Raising wages and incomes. Financial sector reform is going to be the tricky part, and that's where we're going to have to see just how willing they are to push for greater reforms. I think that appetite will be limited because the government still fundamentally sees the financial system as a tool of policy making, and it needs to keep it that way.
Do you expect any hints towards these changes at the National People's Congress meeting on Tuesday?
Yes, I think that will be the first sort of signpost, the first indicators of how much appetite the leadership has toward reform. The next, perhaps more meaningful event will be the third party plenum in October. That's historically, if you look back sort of at 1978 in the Deng Xiaoping reforms, the famous reforms and opening up of China to the world, they didn't happen when he took control of power. They happened at that third plenum in October, which comes sort of almost a year after the leadership change and has allowed them time to consolidate their power. So we'll see the first indications next week, and that will be the growth rate targets that they set. If they set it at 7% or at 7.5%, it doesn't mean that they will hit those targets. But if they set it at 7.5, it suggests that they are triggering an expansion of growth to create that stability that they think they need, whereas 7% shows that they're more willing to rebalance the economy, settle for lower growth rates. The inflation target will be another thing that we'll be looking at. It's probably going to be around the 4%, but urbanization and the liquidity that comes with it raises the fears or the concerns about inflation popping up again. We'll see the changes to the governance. I think another big thing will be they're talking about reshuffling a lot of ministries, creating a big financial regulator, changing energy governance, and including taxation and changes to the pricing of energy sources. So we'll see how much of an appetite and how much political power there is to go ahead with some of these reforms that mean tackling, some of the big vested interests in the Chinese economy. So we'll see where that heads, and just the people who are chosen to head the financial system, whether the current head of the People's Bank of China, if he stays on, or if he's replaced, who is his replacement. All of these will be indicative of, the thinking the thinking about reform.
One worrying factor is the pace of Chinese money growth and credit growth. How would you say that this could be contained?
Well, the general trajectory that we see for the currency is one of sort of gradual appreciation this year. That seems likely to continue. And I'm not sure that we'll get any real indications for that at the MPC. But some of the overhaul of the financial system, if there is one, will be another sign of where the financial sector and the currency are going. On money and credit growth, I think it's a very fine balance for the government right now. They want to make more funding and more financing available for their urbanization push, for social expenditures, for their economic program. But they don't have the leeway and that they had in 2008, 2009 after the financial crisis, when they could go when they could have a very expansionary monetary policy. Right now, they need to be more cautious about not stoking fears, not stoking inflationary expectations again, not creating property bubbles, which is why we've seen them tightening slightly liquidity. So they're going to have this fine balance that they'll need to maintain. But on the whole, we think they will make financing available for their policy goals, and they will keep liquidity going, albeit with tweaks, in order to make sure that they're, that the growth momentum stays on. But when inflationary pressures seem to be rising, they might want to cut back on some of the liquidity.
Thank you to Michal Meidan for her insights into China production today. That's all from me. Have a great weekend and good luck trading.